Investment and research firm AFRINVEST says the short to medium-term outlook of Nigeria's economy would be highly dependent on an increase in oil output by 2017. AFRINVEST, in its latest economic outlook report for Nigeria, says the high concentration of forex-dominated loans has increased risk-weighted assets in the financial sector following pressure on forex rate. Our correspondent, Abiola Ismail, has that detail.
The economic future of Nigeria still remains bleak. Access to capital markets for debt and equity financing remains tight due to the weak macroeconomic backdrop and investment sentiment. These are part of the submission released by the investment and research firm AFRINVEST West Africa in its economic outlook report titled The Nigerian Economy and Financial Market 2016 Review and 2017 Outlook, Reform or Be Relegated. The report explains that the rise in non-performing loan to foreign exchange forex crisis, low oil prices, which fell below trend production volume, the tight monetary policy, which plunged the economy into recession, while the asset quality of banks has sharply deteriorated and resulted in liquidity crisis in the financial sector.
So all these factors, led to the high inflation that we are witnessing at the moment. If we remove energy prices from the calculation of inflation, we are less than 50% actually in 2016.
The three major factors will include: number one, policy uncertainty that remains the biggest risk factor in the year. We think investors are now looking at Nigeria as an investment destination, not because of our attractive demographic features anymore, but in terms of how consistent is our policy, how well or how sound is governance, and of course what is the quality of regulations and reform that we are going to be putting forward to fix our challenges.
On the consideration of another asset management corporation of Nigeria, AMCON, typed bailout to acquire stressed assets. Ike Chioke, the managing director, AFRINVEST, says the feasibility of this is doubtful given the stressed finances of the federal government and already encumbered balance sheet of the Central Bank of Nigeria, CBN. He said Nigeria's business cycle would be highly dependent on the ability of the policymakers output in 2017.
There are certain policy issues that don't balance and they don't see a future. So we're stuck in between a rock and a hard place. And while inflation is now 18.5% and interest rates are 14, the MPR is at 14, to go and say, oh, let me get a positive real rate of return for investors and move interest rates to 20% will be disastrous, to say the least. Quite frankly, we've seen that interest rate is really not being a driver in the amount of borrowings that people do. It's actually more like the reforms in the real sector that would drive people to go in there.
The 2017 budget, which the government is optimistic will address the economic issues, given current macroeconomic reality, will require the focused commitment of both the executive and legislative arms of the government in order to get passed into law so that timely implementation can begin to achieve the objective of stimulating economic recovery through increased infrastructural spending. AFRINVEST believes that activities in the Nigerian economy in 2017 will be broadly dependent on the federal government's resolve to implement tough but necessary structural reforms in order to recalibrate the economy towards the path of recovery and rebuild confidence in monetary policy. Abiola Ismail, TV 360, Lagos.